Welcome to Behind the Law with Justin Clark, the show that takes you behind the law and answers your toughest legal questions.
Welcome back to another edition of Behind the Law. I'm here with attorney Justin Clark and Robert Palmer of RP Funding, and today we're talking about a free annual audit of the things that are costing you more than you think they are, and a way to maybe lower your house payment, your insurance, and your taxes each and every year. Let's get into the program.
A lot of stuff to talk about today, a lot of interesting things going on, but I want to start today by talking about this free annual mortgage audit. And let me tell you why this is even come about. You know, we're going to the holiday season, New Year's resolutions, all sorts of things. And the one thing I find people not ever evaluating once a year is how much they're paying on their mortgage payment. This is the biggest payment that you make every month is your mortgage payment. And it normally includes what's called PITI, principal, interest, taxes, insurance. And I think once a year, you need to really evaluate how much you're paying for all four of these things: principal, interest, taxes, insurance. These are four very different things, but they make up your one monthly mortgage payment, but no one ever really looks at it. And we've created a plan where we're going to do this audit for you. I'm going to evaluate your interest rate. I'm going to look at the terms of the loan. Is this a fixed rate thing? Is this going to change every year? When the rates skyrocket to 15%, like when Jimmy Carter was in office again? Your rate's going to go up with it, or are we fixed? I'm going to look at how much you're paying monthly for your homeowner's insurance. And we're going to really get into homeowner's insurance later in the show. And then let's look at taxes as well. You know, taxes is not a guaranteed science. You have some guy kind of driving around saying, oh, this house is worth this much. You can challenge these things. So once a year, I want people to really look and see what they're paying per month for their mortgage. Again, the biggest check you write every month. But first of all, I have to say something really quick. One of my good friends, a realtor out there, Neil Heiler, I know he's going through a tough time today. His sister is very, very ill, and I just want to send my love to them.
All right,
man. All right. What do you think? I mean,
I love this. We've talked about this. And again, this is one of those things that you've been doing for your existing clients already, and now you're opening it up to the general public. And I think the tax piece is really intriguing because a lot of people, you know, we'll see this, and we've talked about this. There are people who didn't file homestead. They missed the deadline, didn't get homestead exemption filed. They're overpaying their taxes by $500 to $700 a year. They come in, you do this free audit of their situation when it comes to their house, and you identify the fact that they can file homestead exemption and drop their taxes considerably. There's other exemptions out there for different things based on your age. There's other types of military things where you can reduce your taxes. And then two, like you said, Justin, you know, the tax assessor is not always right. And there is a way to challenge this. It's difficult for the general public, but again, as an attorney, you've got the inside track on this. And to be able to go in there and challenge someone's tax assessment and lower their tax bill. And again, looking at homeowners insurance, looking at the terms of the mortgage, we've got all these second mortgages out there, all these home equity lines of credit. Guess what? On a home equity line of credit at year 10, most of these things double or triple the payment because you go from making no principal to now making a 10 or 20-year principal payment, and the payment can double or triple. So again, these are the types of things that your free mortgage audit identifies and can show people how to save money. Beyond lowering the rate and refinancing, there's all kind of different ways to save money with this mortgage audit.
Let me ask you a question, RP, and that is, Robert Palmer, and that is with the home devaluations over the past 8 to 10 years in Central Florida. Now, we've rebounded a little bit. We talk about that on your show. But with the home devaluations, wouldn't it be very wise to take a look at what your tax bill is? Because, you know, if your house was valued at $300,000 10 years ago, now it's valued at $240,000, but you're still paying the same taxes? Doesn't make any sense.
Yeah, I mean, you know, we've seen the tax assessors drop the taxes a little bit, but nowhere near what they should have. And again, because no one's challenging them. You know, you get a guy like Justin on your side, he goes in there and challenges that tax assessment, you can see your property tax bill come down. You know, you get in there and you shop around for that homeowner's insurance and you find a better deal. You know, a lot of homeowners insurance companies have this game where they bring you in with low rates and then slowly creep you up year after year after year. So 5-6 years later, all of a sudden, you don't have a good deal on your homeowner's insurance anymore. You know, that's another thing Justin's looking at to help people save money.
Can you say health insurance? How does it work with health insurance? Every year you're like, oh my God, it's gone up so much. And you notice that because you're writing that check every month.
That's it.
But see, what these insurance companies do when you pay your mortgage, it's your part of your homeowner's insurance policy. You're just paying it per month as part of the general mortgage payment. So it's a little bit hidden. You don't really notice it as much. And I think at least once a year, we need to look at all four of these items and see how we can save you money.
And you'll do that for them for free.
Free annual mortgage audit. I think it's very, very important.
Time for a break. But if you're having problems with your mortgage that could cost you your home, remember that the offices of Gregory and Clark are your one-stop shop for saving your home. Short sales, foreclosure, bankruptcy, refinance, it's all under one roof. Call right now, 321-282-1055. We'll be right back.
Behind the Law is pre-recorded for TV, but you can ask your question live on the radio Sundays at noon on News 96.5. And if you need legal advice right now, Justin's associates are standing by. Just give the offices of Gregory and Clark a call at 321-282-1055.
There's a huge problem with over-insurance. People have been paying insurance on way too much.
Stay tuned. We'll be right back after these messages. Welcome back to Behind the Law with Justin Clark, the show that takes you behind the law and answers your toughest legal questions.
Back to our discussion with Justin Clark and our very special guest, Robert Palmer of RP Funding. You'll meet them both at the great location next week. We're going to be out on the road. We're going to be giving people a hand up, not a handout, at the phenomenal Community Food and Outreach Center. We've all had a great time out there the past 3 years. It's going to be another great time next weekend on the 23rd and 24th. But back to the discussion.
Yeah, thanks a lot, Rob. We're looking forward to seeing you out there as well. Ben, I'm going to tell you some stuff about foreclosures here in a little bit, though, okay? But foreclosures are way, way up and going much, much faster. But I want to finish this conversation a little bit about homeowners insurance because, let's face it, when you get homeowners insurance, you're insuring a certain amount for your property. Makes sense, right? So if your house is worth $250,000, you want to insure it for at least $250,000, or based on the mortgage. House values went down by 50% in many places. Did the homeowners insurance automatically go down? No, I don't think so. There's a huge problem with over-insurance. People have been paying insurance on way too much. Do you see that when someone comes in to refi with you and you see what they're paying, monthly premiums and yearly premiums, that they're paying too much?
Yeah, we do. What we see, Justin, is when home values skyrocketed, people were insuring more than the replacement cost. Again, if the cost to rebuild that house is X and all of a sudden the house was worth twice that much back in 2004, 2005, people were forced to buy too much insurance by their mortgage company because, again, we want to make sure the value of the home is covered. And now that we're in a situation where those values are down, we have seen some people that are able to reduce that coverage down to the true replacement cost of the house and save some money there. And the other thing is we're hearing that because we've had a couple good years without storms, we haven't had any big hurricanes, that the reinsurance rates. So what happens is homeowners insurance companies go out and get what's called reinsurance from these big companies. It's pools of insurance to cover them so they don't have to handle all the claims themselves. And these reinsurance rates are now coming down because of the lack of storms. So the companies that are pro-consumer are going to pass this savings along to their clients. Others are just going to count on people being too lazy to cancel, and they're going to pocket the money. So again, this is where taking a look at annually your insurance, your taxes, your mortgage rate, your mortgage repayment plan is a big deal and can save you a lot of money.
From a mortgage perspective, you own a big mortgage company around here. From a mortgage company perspective, do I want your homeowner's insurance policy to be the value of the house or the value of the mortgage? I don't quite understand how that works.
Yeah, so again, we have a couple different calculations, all right? And so, at the end of the day, we really want to make sure that if the house burns down, or is destroyed, that you can replace it, that you have enough coverage to replace it. But then we've also got to take into consideration the fact that if the house is destroyed, maybe you don't replace it and maybe you just decide to pay off the mortgage and move on. And so what we look at is obviously the land can't be destroyed. So we're not looking for the land to be insured. So we have this formula we run that's based on the value of the home minus the value of the land, and then we take a look at replacement cost. And, again, we try to be as flexible with people as possible. We're not trying to force people to buy too much insurance, but at the same time, too, we have to make sure that they're protected and we are protected if in the event of a loss,
How do you ensure that they have this insurance? So when you go to the real estate closing, let's say you're doing a refi for someone, and you actually go to the closing, and is it the title company's job to make sure that they're protecting the mortgage company, or do you guys do something else?
Yes, so here's what happens. On every insurance policy, there's what's called a mortgagee clause. All right, and this is basically the name of the mortgage company, the lien holder that has a lien on your property. And so when you come to RP Funding and you're going to get a mortgage through us or refinance a mortgage with us, we call your existing insurance company and we say, hey, you need to add us to this policy as the mortgagee as an additional insured. Now, what that means is if you cancel that policy, they're going to send us a letter and let us know that. If you don't pay that policy, and it's not part of the escrows. They're going to send us a letter and let us know that. So once we are added to that policy as the mortgagee, we're now kept in the loop in communication, so that if you do cancel your insurance, we're notified, and then we have to contact you, either have you quickly get new insurance or go through what's called force-placed insurance, which is where we force insurance on you, which is extremely expensive and never a good idea. So it's always better to take care of it yourself. Shop around and make sure you're getting the right insurance policy for you, but it's also acceptable to your mortgage holder.
Let's go to David in Orlando. David, what's on your mind?
Hey, how you doing?
What's up, man?
I recently tried to refinance my house. I don't know if it was that Home Affordable Act or whatever it was. I'm paying like a 6% interest on it, and was trying to get it down to 3%. I went through all the paperwork with the mortgage company, and everything was approved except for the only thing that stopped it was there was a lien on the house. And I came to find out my brother, which is the co-owner, co-signed a loan for his son, an auto loan. They put a lien on the house and didn't know that till that point. And that put, a wrench into everything.
Yeah, we're definitely going to have to hold you over to after the break. But let's get started with you a little bit. Tell me a little bit more about this lien first, and then we'll finish the conversation on the other side.
Well, it was an auto loan that was co-signed by my brother, which is co-owner of the house with me.
Okay.
I'm his brother.
I gotcha. On the other side of this break, we're going to talk about, first of all, what kind of refi he was doing. Was this a modification? Was this a HARP refinance? We're going to go through all of the HAMP, HARP, HEMP, humps, and see which one David was really doing. And then we're going to figure out a way to clear up a lien on a property.
Time for another short break, but before we go, are you struggling to make your mortgage payments? Refinancing your mortgage is an easy solution that could save your home. And Justin Clark has worked on thousands of such deals. Just give the offices of Gregory and Clark a call right now at 321-282-1055, and a free consultation with Justin will give you your options. We'll be right back.
Is your house underwater? If you owe more than your house is worth, Justin Clark may be able to get you an interest reduction through the HAMP and HARP programs. It's an easy way for you to keep your home or even just lower your monthly payments. Just give the offices of Gregory and Clark a call at 321-282-1055. There's never any charge for a consultation, so let Justin show you your options. We'll be right back.
And these lenders are incompetent to do the HARP program even in-house.
Stay tuned. We'll be right back after these messages. Welcome back to Behind the Law with Justin Clark, the show that takes you behind the law and answers your toughest legal questions.
Hey, welcome back to the show. Yes, we're Behind the Law with attorney Justin Clark every Sunday at noon on the radio and on television on Saturday morning on WRDQ TV 27. We're taking your calls right now at 855-297-9696. If you ever have legal questions, call the office at 321-282-1055. Right before the break, we were actually talking to David, and David came up trying to get that home refi, and then he ran into a snag because he found out something was on his credit or on his mortgage that he didn't know. Back to Justin and RP, Robert Palmer from RP Funding.
Yeah, this is the reason why people put liens on properties, so you can't do anything with the property. I mean, it's the whole point. And really, anyone can lien anything. It's really disturbing that you can really do that. Of course, if it's not valid, you can get rid of it. But David was saying that he has a lien from, it sounds like you were a co-signer on your brother's car. Am I right, David? Tell me about that again.
My brother co-signed a loan for his son for an automobile, and his son, I guess, lost his job or whatever and couldn't pay for the car and got it repossessed.
And then you and your brother own the home together?
Yeah.
Okay.
Gotcha. What type of refinance were you trying to do? That's what I want to know.
The HARP.
You were trying to do a HARP, and let's explain this HARP process a little bit. And I hope you weren't doing it through your existing lender. What happened, the HARP is a refinance for people who are underwater, mostly, okay? You can only do it if you're Fannie Mae or Freddie Mac backed loan. But what happens is the lender that you're with oftentimes will call you and say, hey, man, we have this new program, it's HARP program, call us in your documents, we're all set, don't worry about it. Unfortunately, they're incompetent still. It's just like doing a modification. These lenders are incompetent to do the HARP program even in-house.
Oh, and expensive. Let's not forget expensive.
Expensive as well. They're going to charge you fees to do that, and it's going to take a really long time. In fact, the HARP process should be very, very fast. Explain the HARP process. Shouldn't it be quick?
Yeah, it's actually easier for us as a lender. In most cases, the HARP loan does not require an appraisal, which makes it quicker. It requires reduced documentation. We don't have to do as much checking into your income and assets and things as we would on a normal loan. So yes, I mean, I would think most HARP loans should close in 2 to 3 weeks. The only time it does get slowed down is when someone has a second mortgage. So we have a subordinate loan that we have to go back to the second mortgage holder and get them to sign some paperwork, and they can really drag their feet. But if you only have that first mortgage for refinancing, HARP should be one of the fastest loans to close. And again, it's just the big banks are lazy. I mean, it's not that it takes that many hours to do it. They just don't want to hire the right amount of staff. They want to let the file sit on somebody's desk for 5 months, and that's what slows the process down.
Well, and let me ask you this, RP. If your own mortgage company calls you, or your own mega bank calls you and says, hey, yeah, we're going to give you a HARP refinance, are they as apt to give you the lowest possible rate, or is RP funding? I mean, they're getting 8% or 5%. Right. Why would they give me 3.2%?
Well, and they know that you're less likely to shop around. I mean, people who go back to their original lender are much less likely to go out there and shop around. The banks know this. Some of the big banks will actually give a better deal. So if I have a loan, say with Chase, and I call Wells Fargo to do a HARP, Wells Fargo will oftentimes give me a better deal because I'm not an existing client than the deal they would give their existing Wells Fargo customers or their existing big bank customers, because they know that if I have a loan with a different big bank and I'm now calling them, that means I'm shopping around. I'm looking for a good deal. If I have my loan with that big bank and I call them, chances are I'm not shopping around, and they can take advantage of me and make some extra profits. And this is the tactic they use. And on top of that, slowing it down, which can make you miss your rate lock. Rates can get higher. We saw that happen. A lot of people who were trying to do HARP, it took the bank so long that rates got higher and they missed out on a lot of savings. So it's always important to shop around. I'm not going to say that your existing lender is always the wrong choice, but they need to be one of a couple phone calls. Don't just go with them because they're your existing lender.
Mm-hmm. Let me ask you this. Okay, so we're doing the HARP. This lien is a problem. No matter what, even if you were going to do a loan modification, the lien can even stop the loan modification. The bank's going to work with you on the loan mod, and then they're going to say, congratulations, you entered into a trial period. You make 3 payments on the trial period, and then they're going to say, oops, we can't finalize this because there's a lien against the property. However, Robert, any chance with the refi that we could get his brother off of the title, or is that not possible in the HARP?
Yeah, David, how big is this lien? How much is owed on this thing?
It might be 4,000 or something like that, or 5,000.
Okay, and I guess one of the big things to look at, would be how much, if you're going to save enough under the refinance, it may be worth it to try to go out there and take care of this lien. What we have seen is, again, because your brother was on title to the home at the time the lien was filed, even if we take him off now, the lien will still attach. But one thing you may be able to do, and we've seen this in the past, is if you call that lien holder up and say, you know what, I'm taking my brother off this property, I will give you $1,500 to release me and my house from liability. You can keep my brother on the hook, you can attach it to everything else he owns, but I will give you some money toward this debt if you will release my house. And they can do a partial release of this, where they basically would then exclude this home from that in return for you giving them some money. We've done this in the past, and now you're okay. Now that home no longer has a lien on it. They remove the lien from that particular property, and now you can complete the refinance. And again, if you look at how much money you can save by dropping your interest rate, it's probably worth it to give these guys $1,000 or $1,500 or whatever, and then just go settle up with your brother and have him make payments to you for whatever piece you had to cover. But you are going to have to do something. You're going to have to give up something to entice the lien holder to work with you. Wouldn't you agree with that, Justin?
Here's what you're going to do. You call the lien holder tomorrow morning. Let's not bury our head in the sands. We need to do something now. See if you can work something out yourself, and if not, call us at the firm, and we'll certainly help guide you through the process. All right, David, thanks very much for the call.
Yeah, you don't want to break your brother's legs or anything like that.
No, I can't recommend any
don't be
breaking
getting
of
into any
legs
of
or
that
anything.
nonsense.
Those day one of law schools don't recommend breaking legs to get your way, although it seems like it would be a lot easier most of the
It'll
time.
ruin Thanksgiving for sure, yeah.
I'm like, well, we could go through the legal process. It could take 2 years if they appeal 3, or you could just break their legs. It's going to happen really quick.
We're up against a break, but before we go, are you looking to buy or sell a house? Whether you're buying or selling, this very well may be the largest transaction you make in your lifetime. Don't be intimidated. The law offices of Gregory and Clark can find you the right professionals and look out for your best interests throughout the whole buying or selling process from start to finish. Don't go it alone. Call the offices of Gregory and Clark right now at 321-282-1055. We'll be right back.
But they're billion-dollar companies now. I don't understand how it's free, yet you're making $1 billion off of it.
Stay tuned. We'll be right back after these messages. Welcome back to Behind the Law with Justin Clark, the show that takes you behind the law and answers your toughest legal questions.
We are still taking calls at 855-297-9696. We're talking on this show about the fact that, again, Justin Clark is being very, very proactive, just like Robert Palmer is with his company. And together they've started some great proactive things like the Home Value Hotline. But in this case, it's an annual review of what you're actually paying, because up until now, out of sight, out of mind. I know everything goes up every year, so what am I worried about my house payment going up a little bit? Well, it doesn't have to.
I just think it's funny that every year you get mad because your cell phone bill went up because there's this new excise tax or whatever, and you signed up for this free program that's going to be automatically withdrawn from your bank account every month, but you forgot to cancel it. So every month it's being withdrawn out of your account. But the biggest expense we have every month is our mortgage payment. So the free annual mortgage audit, which we're going to do for you, is we're going to look at your interest rate, look at the terms of your payment, look at the insurance, and look at the taxes and figure out how to save you money. I think what you do is you find one calendar date a year, whether it's Thanksgiving, which is coming up, Christmas, your birthday, or whatever, and let's really evaluate this in every bill that you're paying. I mean, print off your checking account statements every month and see if there's some stupid automatic free creditreport.com thing that's coming out you didn't even know about.
Yeah, those free credit reports are quite expensive, aren't they?
Oh, absolutely. I mean, the free credit report, they're billion-dollar companies now. I don't understand how it's free, yet you're making $1 billion off of us. It's unbelievable. Figure out one time a year, maybe the new year, where you really go through and look at all of these things. And the first thing that I'm going to do, in fact, is when I do a free annual mortgage audit for you, is I need to figure out what your house is worth, because that gives me other options as far as a refinance goes. And the only way I really trust to figure out what your house is really worth, it's not these Zillows, it's the Home Value Hotline, which was created by Robert Palmer, and it's at 866-222-8231. You're going to have a local realtor on the ground who sold a house in your neighborhood last week tell you what your house is worth. That's 866-222-8231. To the TV crew, Rob Newton, Robert Palmer, thanks for coming in again, brother. Good to see you as always.
Me on there, man.
See you next week, Newt.
Well, that's it for this week's edition of Behind the Law with Justin Clark. But if you still have any questions, don't wait for next week's show. Just give the offices of Gregory and Clark a call right now at 321-282-1055. They've got the answers. And don't forget to tune in next week for our continued discussion on a free annual audit of what you're paying the bank or the mortgage company. We'll be back right here next week on TV 27.
Thank you for watching Behind the Law with Justin Clark. Be sure to join us again next week as Justin takes you behind the law and answers your legal questions.